Hi dear traders! Today is Thursday, November 4th and I'm online again with a fresh market review prepared for InstaForex. The crucial event that took place yesterday has a profound impact on the stock and currency markets. The trading community was alert to Powell's speech, settings of monetary policy, the timeline for tapering the bond buying program and the pace of monthly reduction of asset purchases. Jerome Powell stated that the termination of the QE program is not related to rate hikes. From his viewpoint, high inflation is a temporary headwind. Markets responded differently to such an outcome. Today we can make some conclusions analyzing common trends. Powell didn't make any sensational statements because everyone was anticipating the Fed's leader to announce tapering. There was a slim chance of delaying this announcement until December. In fact, the Fed intends to launch tapering in November. This is hawkish news welcomed by dollar bulls. The dovish side is that the regulator is not going to raise interest rates sooner than later. A lot of trading instruments responded differently to such policy decisions. The stock market grew in light of Powell's statements for the obvious reason. Interest rates will not be raised ahead of schedule. I myself recommended buying silver. Yesterday I managed to buy gold. Investment in precious metal is an interesting opportunity. I bought gold retracements before Powell's press conference. What's going on with gold? Let's discuss it with the charts. On October 22nd, Powell made a speech that racked the gold price. Before his speech, gold was making a crazy rally. Then bang, gold slump. What happened yesterday? Powell gave a press conference. Before the press conference, gold was falling for the whole day and broke the lows of October. That is where I began buying gold. Powell unveiled the policy decisions and gold sharply reversed upwards. Such abrupt reversals are the common things at the time of crucial news. If you see a price reversal, you can try trading in the opposite direction. You will have a chance to open positions at sweet price and earn solid money. What's my idea for gold now? Gold broke the low of October yesterday. This is not enough for a trend reversal, but it assures me of my ambitious targets. I still dream about 1,833. Yesterday, Americans were buying gold. Now it's trading above that level. It proved that gold investors grasped the point in Powell's speech. He said that after the QE completion in the summer 2022, the Fed is not going to raise interest rates. Hence, the interest rates will not be able to raise for at least 8 months ahead. It was clearly stated, so gold will be able to grow in the next 6 months. Everyone who was selling gold hoped for the hawkish statement, but it didn't happen. All those who were selling have come to break even or even made losses. Personally, I favor long positions on gold. If you didn't buy gold yesterday, you can do this now with the first target at the high of October and higher towards 1,833. I dream about this target at night. By the way, silver dropped to a 50% Fibonacci retracement right before Powell's press conference yesterday. I advised it buying silver from 50% to 61%. I took advantage of this drop to buy silver with the target above 24.875 and at 25. I'm betting on silver growth to this target. Yesterday, the metal closed with a nice pin bar, which means a completion of wave B after wave A in October. The weekly chart suggests a more serious bullish plan. Having broken a 1-year low, silver could jump even above 30. The euro-dollar pair rose yesterday and then went downwards in the line with our scenario. The euro also has some influence in the pair. The euro plummeted on Friday and made a great 50% retracement yesterday. Someone opened short positions with the aim of keeping sell positions until a 1-year low is broken. 30 pips are left before this breakout. Be cautious with long positions in this area. Those who were buying the pair for the whole October are setting stop losses at the low of the year. This level could be broken soon if you have opened short positions fixed profit at a breakout. I'm not a fan of trading long-lasting trends of the euro-dollar pair. The market entry point with long positions should be not a lower low, but the point of the emerging bullish impulse at a retracement. A stop loss is below a fake breakout. The first take profit is about the double top and the second take profit is 1.18. This trading plan is premature, but it makes sense. I mean that when the price approached the low of the year, there is a fair chance of a strong bullish move. Like gold, the pound sterling tested a 50% retracement of the powerful bullish momentum. The pound could make a fake breakout of 50% Fibonacci level. You can choose any trading instrument to benefit from the weakness of the US dollar. This could be the euro-dollar pair, gold, silver or platinum, or perhaps the pound-dollar pair. All these trading plans are based on the same idea, the greenback's weakness. My friends, I warn you not to use this idea on all these instruments. Should the US dollar rise, you will lose with all your instruments. So that's all for today. See you online soon. Bye bye.